Hello traders, welcome back to the channel. Today we're diving into the recent movements of the US dollar index, crude oil, gold, and some key currency pairs. So let's break down what's happening and why it's important for the markets. The US dollar index took a hit last week, falling sharply to 106.55. This week, it's down another 1.2%. What's driving this? Well, we've seen some domestic challenges, including weak retail sales data for January, where overall sales dropped by 0.9%, and sales, excluding autos, fell by 0.4%. This suggests that US consumers are tightening their belts. On top of that, President Trump's tariff policies aren't causing much of a stir in the markets, since investors believe the actual impact might take time to be felt. The US dollar's safe haven appeal is also being challenged by growing optimism around a potential peace deal in Ukraine, which has boosted European assets. We've also seen a cooling of expectations around future interest rate hikes by the Federal Reserve. The latest CPI and PPI data were stronger than expected, but the market still isn't betting on aggressive rate hikes in 2024. Instead, there's talk of just one more potential rate cut later this year. Technically, the dollar's value is still overvalued and is facing growing downside risk. If it can't hold the support levels around 107 or 106.97, we could see it dip further, possibly towards 106. Last week, oil prices took a small dip, but there's a lot of uncertainty in the market. On one hand, talks of a peace deal between Russia and Ukraine have some speculating that oil supply could improve if sanctions ease. On the other hand, US tariffs, including the proposed new tariffs on crude oil exports from Canada and Mexico, are weighing on the market. Despite these fluctuations, crude oil has managed to hold above $70 per barrel, with Brent hovering near $75. The US oil industry is cautiously optimistic that exemptions to the tariffs could be on the way. Looking at the charts, crude oil rebounded last week from around $70 with resistance near $73. If it breaks past 73.69, we could see a bullish shift. If it falls back below $70, we could see further downside. Now let's talk about gold. Gold prices fell sharply last Friday due to profit taking, but they still posted a gain for the seventh consecutive week. The surge in gold prices earlier this week, which hit a record high of $2,942 per ounce, was fueled by fears around trade wars and inflation concerns, especially after Trump's announcement of reciprocal tariffs. Despite the recent pullback, gold is still showing strong upward momentum on the charts. However, caution is needed since the relative strength index is in overbought territory. If it breaks past 2,943, we could be looking at a run towards the psychological $3,000 mark. But if selling pressure intensifies, watch for support around $2,876. The Aussie surged last week, reaching a new high of 0.6367, largely thanks to Trump's decision to delay the implementation of reciprocal tariffs. The Aussie is benefiting from the weaker US dollar and falling US yields, but concerns about a global trade war are still hanging in the air. Looking at the technicals, AUD/USD is showing strong momentum, with the pair breaking above key resistance levels. If it continues to push higher, we could see it test 0.6389 or even 0.64. However, if the Reserve Bank of Australia cuts interest rates soon, the Aussie might face some pressure, especially if it falls below 0.63. Finally, let's touch on USD/JPY. Last week, this pair saw some sharp fluctuations. The US dollar initially rose above 154, but then quickly fell back towards 152, wiping out the gains. This is all due to the uncertainty around US Treasury yields, Trump's tariff policies, and global trade tensions. In the short term, USD/JPY is likely to continue bouncing between 151 and 155. If the US dollar's momentum falters, we could see the pair test lower support levels, especially around 151. But if it breaks above 153.76, it could push higher. So there you have it. A lot of uncertainty in the markets right now, but plenty of opportunities to watch. As always, make sure you're staying on top of the latest data and news, and we'll keep you updated on the many major shifts. Don't forget to like and subscribe, and if you found this helpful, drop your thoughts in the comments below. See you next time.